What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be watching for the future. I'm also going to give you guys more macro analysis of the SPY, the S&P 500, the QQQs, and actually breaks down why this is super important, why this setup is in a very critical level, and how this will affect Tesla over the next couple of days, over the next couple of weeks, and also what the data is showing us. Now, before I break anything down about the Fed, what's going on with the markets, and how this may affect Tesla, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, but benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is any could be a free Tesla share. It's a limited time offer. The offer ends in a week. Check it out before they run out. With that out of the way, let's get on with the video. Looking at the market, guys, I want to talk about something very important. All right, when you look at Tesla, this is what Tesla's share price looks like in the white, and then in the background, this is SPY. Look at the connection between them. They tend to run in very similar manners until, as of recent, you're noticing that Tesla is showing a lot more weakness. It's been very weak compared to SPY. Compared to the QQQ, aka the NASDAQ, you will notice a very, very similar trend. Tesla is actually a little bit more correlated with the NASDAQ, but you can notice that both of them have been kind of taking a bit of a hit, but Tesla is still showing more relative weakness overall. Now, Tesla did close in a very critical level, and despite that, Morgan Stanley are still very bullish. In fact, I think they did upgrade their Tesla price target for the long term. Many institutions believe that over the next 2 years, Tesla will easily break past close to like $1,000 a share. It still is very possible over the next couple of years. I'm super bullish, guys. I believe Tesla is going to yield huge returns over the long-term future. But for the short term, there are some very important things you have to know. So right now, the market is what is affecting Tesla. Please note that we have the next FOMC meeting in about 25 days, and the market is essentially priced in a 50 basis point rate hike, which is why the market's performing the way it is. We are most likely going to end up seeing it unless some new inflation numbers come out, because I think CPI is coming out right before the FOMC meeting. So if inflation is high during the next meeting that comes out, the next report for CPI, this could actually change the Fed's decision. So it's important to be very careful. But as of right now, we are on a pretty good track. It's just that we can't really forecast CPI just yet. We need to see many of these readings to get a good understanding of whether or not it's truly coming down. And because of that, there is uncertainty about how the market is going to move. So when we look at how the market looks, guys, this is what SPY looks like, the S&P 500 over the last couple of, I would say like the last week and a half or so. I'm sure you guys remember we had that huge rally on the left right here, this massive rally that caused this huge gap up because of the CPI being a lot lower than expected. And because of that, the market has been holding up at least relatively well. But some people could argue that this was a bit of an overreaction. So now it comes to the focus of whether or not we're going to continue pumping, or are we about to come down. And there is a bullish and a bearish perspective. I'm going to share both of them with you. Let's first talk about the bullish perspective. So even though this does seem quite unlikely, if you look at the daily chart on the SPY, notice how when you bring out these EMAs, they can act as support and resistance and also give us a good understanding of price action. You will notice that on the 200 EMA, which is notorious for telling us what the trend is showing us, we're very close to it. And this is strong resistance, excuse me. And if we actually break above it, this is going to be it's going to require a lot of momentum, a big catalyst that really causes this thing to run. If we somehow manage to break to the upside, all right, SPY is likely going to have to break 400. That's going to be a strong resistance zone. If we break 400, then we have 402. Break above both of those levels, and this thing is likely going to go all the way up, in my opinion, to this like 407 to 408 level, because we have this big gap over here. Notice how there's this big gap right here where my cursor is. There's this giant gap, right? So that would be a more bullish perspective. And what is some evidence of this potentially happening? Well, the truth is, you could look at the options chain. When you look at the options chain, you will notice that on SPY, for some reason, all my pages are reloading when I click on them. But anyways, when you look at SPY, okay, you will notice that the put to call ratio is crazy, right? And you don't have to consider this a good thing or a bad thing. For the week, we have a 2.39 puts to call ratio for Friday, which means it's over. That's like 3 puts for every one call, right? That's crazy. That's absolutely insane. I'm sorry, 2 puts for every call. It's more than that, almost three. So that's insane, guys. There are way, way, way more people loading into the puts, betting the market's going to come down. So because of that, what happens is with all these people betting in one direction, the market makers are still incentivized to cause the opposite to happen, which leads to more pain. Max pain happens to be around like 390. It does not matter that much. The market could continue to hold to cause pain for all these people loading up on the put side. And that's part of the reason why, as crazy as this sounds, some of these shorts could get squeezed out of their positions if the market continues to rally. Right? Very, very possible. It is still very possible. If the market rallies and continues to push up, there's a sign that this could actually help Tesla. Because when you look at this, the 5 minute on SPY, for instance, and compare this to Tesla, check out the similarity between these charts. All right. The way the market moves does tend to affect how Tesla moves. The overall setups look very, very similar here and here. Look at that. Nice pop into open, nice pop into open, big sell off as the day goes on. We both hit our bottoms at very similar times, followed by a small rally to end the day. That's essentially what happened to Tesla. You could do the exact same thing on the QQQ. And remember, the QQQ tends to be correlated with the SPY, right? Very similar setup. It is affecting Tesla. But now I want to talk about the bearish perspective on SPY and what this could mean for Tesla. So please remember that looking at the chart on this side, where my cursor is on the right side, Tesla right here, we actually were in a very key demand zone, 177 to 180. We actually touched 176.5. But like I mentioned previously, the buyers came in. If the market tanks, guys, very hard, it's going to be the least ideal situation for Tesla. Tesla has to bounce off this. If we don't, we could have some support at 175, but there's not an indication it's going to be extremely strong. If the market crashes or like takes a huge hit, Tesla is likely, and if Tesla does not get enough buyers stepping in, right, it's very possible for Tesla to start tumbling down again. Now, I don't want to tell you that it's going to happen on Monday or Tuesday. I don't know when it's going to happen. It could take like another week or two. It could take some time. And I think it is more likely to take some time because of the fact that the options chain is just loaded up onto the put side for SPY. But anyways, guys, for Tesla, if the market comes down hard and Tesla does not get enough buyers and the bears take over, the shorts go crazy on Tesla. They love to short this thing. If Tesla breaks 175, this thing is going to come tumbling down to 168. If we don't hold that, there's not much room for us. And we're going to come all the way down to the 150s pretty quickly. All right, if the whole market collapses, that could happen pretty fast to Tesla, which is why we have to bounce off this zone. We have to hold it for hope for the bulls. Now, is there hope for the bulls? Yes, there is a chance we could get a nice bounce. Like I mentioned, the market could still push up. We could still see the market continuing to rally because of the over leveraged puts. But then what is the evidence of the market potentially coming down? Right? We can't be too biased and just say what we like. We have to say what the truth is. If the market is supposed to come down, let's look at what the entire situation could be. What is the perspective of the bears? Okay. So one thing you'll notice is the fact that we have this nice rally, this nice top right here, and then we're starting to kind of come down. This is resembling a Wyckoff distribution schematic that looks like this. Notice how we get a nice push to the upside. We have some resistance that slows us down between this level and the activity that's right over here. Then we have this one top here before the market starts to tank, just like that. Now, just because the chart resembles this, it doesn't guarantee that that has to be, because what's unfortunate for the bears is the fact that this does also look like an accumulation within this distribution. So institutions were buying shares down here, and we are seeing lots of bulls come in at this key demand zone, which is around that 390 level. So it could really go either way, right? But if you want to see a perspective and a real example of this potentially leaning in the favor of the bears, I actually have one for you. Look at the last time the SPY had a big rally back in August. Remember the way this thing ran up so hard and so many of the shorts got squeezed out of their positions? Compare this to the Wyckoff distribution right here. Very similar setup, right? And you will notice that what happened was we had this huge gap up. We start pushing up very hard, right? Nice push to the upside. Then we come tumbling down. But I'm looking at this on a too small time frame. So it looks more like this. The whole thing is like way bigger. This whole distribution, it's way bigger. But if we look at it from this perspective, notice something that happened. When we were coming down, we basically gapped down. We come down pretty hard. But then all of a sudden, there's this rally here. This big rally before the big sell-off happened. This little rally, I mean, this is basically a trap that actually trapped a lot of these bulls out there. The market ended up coming down pretty hard. You could argue technically that we are seeing something similar. Am I guaranteeing it? The answer is no. But if you look at the setup, we had this big distribution like pattern. We come all the way down, we gap down, we start kind of like rallying and respecting an uptrend. Notice how we're just starting to push up pretty hard. Could this be a trap? The truth is, from a technical standpoint, we can't always guarantee it. It's very hard to tell these things because the market could go either way because of the options chain. The options chain is what makes me like less certain. But if that's the case, notice how on this chart we had a very similar setup. See how the market just pushed up and up and up, just like this, and then this one led to a big drop afterwards. So it is possible for SPY to come down. Now, if you want confirmation of a direction, here's what you got to watch for. If you are trading Tesla, let's see how SPY responds as well. If the SPY continues to rally and holds these levels, that's going to be okay. But if you want more evidence of us potentially seeing a more bullish perspective, this is going to help Tesla. That's why I'm talking about this. You need to see this thing break 400 to 402. Maybe there's some black swan event, some catalyst that comes out. Maybe some Fed officials come in, shorts get covered, shorts get squeezed, excuse me, they start to cover. That could actually cause this thing to push up. You have to watch 400 to 402 on SPY. Break above that with lots of momentum. It is possible for us to break, fill the gap that's right here, and actually retest 407. If that's the case, Tesla's likely going to see a small rally, and Tesla could quickly come back to that 190 to 200 zone. It's very possible for Tesla to do that. But, like I mentioned, guys, if this truly is a trap, like I mentioned right here, if this trap does end up being what plays out, and you have to be ready for this, this could trick a lot of people. Here's what you have to watch for. You have to remember the demand zones. It's a demand zone because there's so many buyers that came in and helped pump SPY in this level right here. The highlighted zone is what I'm talking about. It's around this 390 level. If SPY breaks below 390, if it does, and we can't hold 390, we're likely, in my opinion, to come all the way down to about 385. If SPY comes down that hard, there's a good chance that Tesla's going to be retesting 175 or even lower, in my opinion. And the truth is, it is possible, but I'm a little bit less inclined to believing it's going to happen that way because of the fact that on SPY, I mean, there are way too many people for this week loaded up on puts. Way too many. Way too many. So is it really going to be the case that the majority of institutions and retail that are loaded up in puts are going to make a ton of money? Maybe. Who knows? Because I can't guarantee anything based off the options chain. We can't promise anything. History can repeat itself or it may not always do it perfectly. But at the same time, it's an indication that maybe, just maybe, the market makers, other institutions are going to cause pain for these investors by causing the market to hold up for the remainder of the week because so many people are over leveraged on the put side. Right? I don't really know what's going to happen. Nobody truly knows with 100% certainty. Nobody really knows. But one thing I can tell you is watch SPY very carefully. Keep your eyes on this if you are a trader. Not financial advice, by the way, but watch this thing very carefully because if it does end up coming down hard, this is not going to be the best for Tesla. there is a chance Tesla, which is in this demand zone. Wait, where is it? Hold on a second. There we go. So Tesla, which is all the way here. I don't know what my chart is doing. All the way here, this demand zone where Tesla actually bounced off of. All right, so right about here, Tesla's been downtrending pretty hard. If SPY comes down hard, I mean, it's just not going to be good. We need to see buyers come in and help this thing push up. Maybe Tesla could even help SPY push up if this thing does end up seeing a nice rally. Very possible. But like I said before, guys, if this thing pushes down hard, it's not going to be the best for Tesla. If this thing holds the levels it's in and doesn't like come crashing down that hard, then there's a good chance that Tesla could actually continue to rally, could hold up, and we could actually see Tesla continue to push. I do think we're a little bit more likely to see SPY actually hold up to cause pain for the puts. But then again, you got to be prepared for anything. So watch the key zones, pay attention to Tesla. We have resistance at 185, a little bit at 186. There's actually a gap up here. Maybe Tesla can fill this relatively soon if we do get a bounce. And a break above 186, it's very possible this thing flies to about 190 if we see enough buyers and we see some shorts maybe like start to cover, maybe a little bit here and there. We also see more calls being bought. We see more and more price action that's positive and momentum being built. It's very, very possible. So I'm more inclined to thinking Tesla's going to see some more bullish price action, but like I said, I'm always prepared for anything just in case some news comes out or things don't go according to plan. Anyways, that's what I have for this video. I hope I brought some value into your guys' weekends. Please remember, okay, that if you are trading in the stock market, you can't just be staring at one stock at a time. All right. I mean, could you do that? I mean, if you're using your phone, I mean, you basically can once in a while, but you also have to keep in mind and pay attention to what the overall market is doing. The SPY, the QQQs, these things will affect Tesla. The NASDAQ really does affect Tesla, believe it or not. Anyways, thank you all for listening. Have a great rest of the day, and I'll definitely see you guys in the next one. Tesla to the moon, because the long-term future is still incredibly bright, and peace out.